huge percentage, about 20% plus of GDP comes from agriculture in these areas. And Africa has the potential to actually, because the rich soils, it has the potential to produce actually 2 to 3 times of grains and cereals. Some of the reports say something like this. And apart from that, there's a huge potential for horticulture crops, livestock. So looking at all this, if we start seeing where does it come from, how does it look like in the geography? So we see that about 60% of the sub-Saharan African countries are the major contributors, and they have the huge potential for these kind of crops. And if we look at, say, countries like Ethiopia, Nigeria, Tanzania, Kenya, Zambia now, these are the countries which have the highest the concentration of potentials which have been created there. So there is an agriculture development happening there. There's policy support to a certain extent, and these countries, they have illustrated the variations well, because there has been some support from the government in agriculture and in enabling environments and in improved input adoptions. So if we can look at this particular setup, it is slightly promising, and there has to be an impact which will be gathered at a point of time. Apart from this, if we look at what are the market access situations, so the dimensions are that such as market access, population density, and agroecological conditions suggest that about 20 to 30 million hectares of cropland in sub-Saharan Africa is cultivable today. And which means that there is scope, there is potential, but there is need for the right kind of support, which is required from the African ecosystem, from the government support. That's going to help in this category a lot. And further down, downscaling it a bit, we see that there are primarily two categories of farmers there in the sub-Saharan Africa and other places. So one category could be the rising class of farmers, which have acquired some land in later stages of life after having some monies, and then they are the ones who are able to bring in some kind of inputs and new inputs and new practices into agriculture, but then they have limited access to finance. That is one area which will have to be looked at. Credit is an area which will have to be slightly more deeply delved into. And the ownership of the capital assets is key to improving the livelihoods of the smallholder farmers there. So there's a constrained lack of natural capital, plant size, land access, land tenure, farmer property titles, and these are actually difficult for smallholders, and therefore they find it more difficult to invest in sustainable practices and using land as a collateral in attempting to access loans. So we'll have to look at that another angle which is there. And then there are areas where if we look at the ROIs in the place, this ROI is quite zero for smallholder farmers there. But in other places where we see there is a better crop insurance, government welfare plans, guaranteed offtakes, and even access to low cost food. But at these places, the risk mitigations are still not providing a safer bet, because high investment doesn't necessarily say that it will also improve the ROI, because there's difficulty in offtake of the produce. So these are some of the issues which are getting picked up, which will have to be addressed to a larger extent. And looking at also the socioeconomic circumstances, the agroecological zones, and climate smart agricultural technologies, which are now being brought in some countries. So they're going to play a big role. There's support which is coming in from programs such as the climate smart villages of the climate change, agriculture and food security program of CGIAR, the FAO sponsored mitigation of climate change. There is the R4 of the World Food Program, and JZ has its own programs. And then there is the, the, the Central Agricultural Development Program, which is there for about 40 countries, which is going on in Africa. That is also playing a key role in bringing in some kind of cohesiveness between the countries, so that the support for smallholder farmers picks up in. The other angle to this is that for organizations, or for, say, the larger interest groups with pockets who would like to invest in the agricultural landscape of Africa, they would like to see what's the kind of returns which they get, because what's probably is also noticed is that the setting up cost could be high, and the exit load is also high. So then the returns on investment become quite difficult to actually achieve the right kind of dynamics. So looking at that's an area which will be delved upon during the webinar. Now this COVID has actually affected the farmers. Yes, there's been difficulty in finding adequate markets, and the food systems have been pressurized, which more because of the labor migration, which is also taking the reverse labor migration, which is taking place. Some of these factors which are affecting it is actually the supporting stronger and more local supply chains. That is one of the things which can be looked into, by ensuring comprehensive trade alliances and cooperations, by bringing investments, more investments, and utilization of digital technologies on multiple levels, and then bringing in or leveraging stimuluses and recovery programs. Some of the areas where focus can be brought in. This is what we see, and then if we have to try and see what are the areas, how we can slightly emerge better from this pandemic is by ensuring 2 or 3 things, which could be also like to ensuring resilience, bringing in policymakers to promote the risk mitigation methods, new risk mitigation methods, bringing in a digital inclusiveness among smallholder farmers, because that's where they are able to bring transparency in the system, and then they're able to also bring them into the mainstream with access to all kinds of support from the government and from the other stakeholders which are involved there. So these are tools which could be picked up. Reskilling could be brought in, upskilling is there, and of course regulatory barriers which could be removed for both the front end and the back end systems. So we are now looking at ways to find new policy designs, new innovations, innovations and fundamentally new thought processes. Those are needed to actually look at solutions for these kind of issues in the system. Looking at particular these things, we will be now looking at, this webinar will be addressing some of these issues. We've got a fantastic lineup of speakers today with us. And we'll be looking at 4 sessions during this webinar. So the first session is going to be on the risk management ecosystem, and at the macro level, how farm productivity in countries and smallholder farmers is being managed using that. So we'll have Mr. Chris Sturgis from Burnt Orange will be talking on the subject. We'll have a session 2, which will be on technology-based insurance and how it affects productivity. So we have 2 speakers, one Dr. Nihar Changle from GIZ and Mr. Matthew Dubrol from WFP. And I'll also take this opportunity to congratulate the World Food Programme and Matthew for the recent Nobel Prize, which has been heaped on them because of the wonderful work which the organization has been doing. And we've got a 3rd session on the new solutions which have been brought in by the insurance companies in Africa in the agriculture risk management. That will be delivered by Ms. Nisa Banda from Mayfair Insurance. And the last session will be on whether AgTech or can AgTech help in managing risks. Mr. Sonu Agrawal from WRMS will be talking on the subject. We'll have 12 to 15 minutes for each speaker. We'll try and request the speakers that we'll try and cover up the slides and the talk within the scheduled time, so that we leave time for questions and answers. We've got a wonderful audience today. We've got some 100 registrations already now, and more than that have already registered, so they'll be joining in. So that's how we see things. So I'll invite Chris to start off with his presentation. Chris, over to you.
Thank you, Sujay. Much
And
appreciated.
maybe, sorry, if I haven't introduced you correctly, maybe I can do that. I'm just apologize for that particular thing. So yes, give me half a second more, and I'll also introduce Chris as a part of our. So Chris has been running this burnt orange trading since the last 2 years, but he has been a veteran of the commodity derivatives in the capital markets in South African landscape, and he's been with the Johannesburg Stock Exchange since 2 decades now. Chris is also he's been working on various other countries in Africa, and where he's providing this consulting and advisory services in the segment. He's known for his expertise on derivatives markets and also with the farming systems, and he understands the smallholder farmer setups there. He also runs his own country resort in the South African space. So that's interesting to see how he's been using his time as well. So Chris, hope this webinar also brings in a lot of new ideas for you. Please go ahead.
Thank you, Sujay, for that introduction. Certainly much appreciated, and for the opportunity to work with yourselves with this webinar. So thank you for that. I was just looking at that picture that you had on there, and it's fantastic to see me wearing a tie. It's been a while since I've had to put a tie on. I guess with COVID, the dressing up is not a requirement anymore. So great, one advantage.
Yeah, that's what it is.
So yeah, if we can start with my slide deck, really, I think we've been asked, especially just to talk around the smallholder farmer in Africa, and particularly around the risks that go with it. So if we can kick right into that to keep with the timelines, the second slide really talks about the potential challenges for smallholder farmers. And if we look to the list of speakers and their backgrounds, I think many of you who are attending the webinar are very familiar with the challenges of a smallholder farmer. But I think just to put again into context what we're trying to find solutions to is, let's quickly run through some of those challenges. And Sujay, you also really aptly addressed a number of them. And particularly, let's start with the input supplies. I think often the ability to get inputs at the right time to be most efficient on planting is also a challenge for a number of smallholder farmers. And so obviously some countries have spent time coordinating this at government level, but often I think if there was a more independent way of coordinating this, it would help with the input supplies. The other is also a challenge to equipment. And I think as a smallholder farmer, you're producing commodity for the household, but more importantly, you're trying to produce a surplus to sell. And the challenge remains, how do you scale that production, and how do you afford the equipment? We've seen many of the equipment manufacturers partnering with smallholder farmer groups where you have attracted to rent or to share, and that gets you into increasing production. The skills transfer, a very exciting place and a space at this time. And I'm glad to see there's another speaker who's going to talk about that kind of technology, because that really is the game changer. I think we're so fortunate, again, even with COVID, how we've learned to adapt with mobile technology. And I think this will really be the game changer in terms of increasing production. It's really just being able to get those inputs and then relying on the good Lord above to get rainfall out there when we need it. So I think we also look at cash flow that was mentioned before. The other is access to reliable commodity prices. Often smallholder farmers, when bringing product to market, are not always up to date with the latest prices. And so I think more transparency in that space, and that's in a particular area where I've spent lots of time working on, is trying to get more transparent commodity markets up and running. And then, yeah, counterparty risk. The trader that I'm selling the product to, will I get paid? Will the miller or the processor pay me? And even the question is sometimes is, will the government who's buying my product pay me, or that government program? So those are the real risks that many of the smallholders face. So the risk management products out there, I think also not too unfamiliar with many of you on this webinar is the crop insurance products, and also a great innovation I see happening in that space, where your traditional rain or hail kind of crop cover is now getting smarter in the sense of combining it with yield and even price, and working with input suppliers or chemical companies to say, let's package this as a product that you buy the right chemicals, and we can also tag on some additional type of insurance cover. So a lot of space, a lot of things happening in that space. Structured finance, I think for inputs remains a challenge. It is out there, but as you were talking about, how do smallholders get access to finance? And often because they don't have title to the land, yes, they can have the commodity. And so there's been a number of initiatives through warehouse receipts to be able to get exchanges. An example is in Malawi, where you have warehouse receipts being issued, and those are then accepted by certain banks to finance. Zambia have also tried their very best. They have a warehouse act in place, but unfortunately the initiatives through Zambia have not been as successful as we'd hoped. Spot commodity exchanges, as I've mentioned already, we have Zambia, we have Malawi that's up and running and really doing their best there. We have in Nigeria, AFEX, which is also working their best to be able to bring more platforms where players can buy and sell commodities. And then the commodity derivative space, really, today we only have the most operational and active one being in South Africa through the JSE or the old SAFEX market, but also a mechanism perhaps more sophisticated by using futures and options to manage price risk. But really, I think many markets feel that derivatives are too daunting. I think I'd love to refer to an example where the Malawian government bought call options and bought to protect their own food supplies. And so we have seen governments from time to time use derivative markets to manage their own price risk. So as we move to the next slide, I think the question out there is how can we package these different risk management products to be the most cost effective and the most accessible to the smallholder farmer? And yeah, we talk about perhaps a more coordinated input supply program. There's been initiatives, many of you would know about these in the different countries where governments have tried to supply fertilizer or supply seed. But I think let's also be honest with ourselves. If that is run in a very efficient way, that's a fantastic mechanism to support the smallholder farmer. But in many times, unfortunately, corruption does lead to the inefficiency on that. And I think we all have that challenge that we have to try and deal with. Access to extension services in the ideal ecosystem for smallholder farmers is up and coming. And I think watch the space as technology really drives that in the extension space. Access to finance, I think we have started seeing that banks are relooking their risk appetite. It remains a challenge. I'm busy working with the exchange in Malawi, really to find how can we use perhaps a very simple option product to give the banks the necessary price risk management hedge, which then opens up their ability to finance product and warehouse receipts. So I think it's a combination of risk appetite from the banks, but also just trying to keep to a very simple product that removes the drastic price moves out of the market. Secure and a cost-effective storage. I think really we've spent many years on the continent trying to be better at storage because of the type of crop losses we see. But I think it comes down to the fact that finding operators who can guarantee quality and quantity. And I think, players on this webinar will know that there are insurance products around that. How do we find and make those insurance products even more cost effective? Access to reliable price information. Ultimately, prices will drive that market sentiment. And so if we could have better pricing out there, that could possibly guide a smallholder farmer to say, where are the best opportunities for the new season? But again, it's one thing to say the price today, the spot price today, but if you had a market where you could secure forward prices, or even a derivatives market, which would give you ability to lock in prices to the future, that then really evolves a smallholder farmer. And then obviously the ability to manage counterparty risk. And so there are different models that could work here. Obviously, the clearinghouse model in derivatives is an easier one, but perhaps we need a type of fidelity fund or a guarantee fund that could step in and try and protect the smallholders. So what will it take to get us there? I think at the end of the day, I've kept on stressing coordination amongst the smallholders, but we need more volume. If we have more volume, you have more scale, everything is becoming more cost effective, ideally. And so the ability to avoid complex risk management products is also, I think, let's keep things simple. Often you have a strategy, you're dealing with smallholder farmers. There's no need to really make it super complex and really just say that produce the product, we'll give you insurance if this happens on a weather side or a yield side, and we'll give you a floor price on your price. If the product is simple, so we expect the adoption rate of that product to be better. And again, scale of production. If you've mentioned the potential for Africa, we have huge potential to grow more product. If we can increase the production, so we have more players taking up and using the insurance products or the derivative products or the exchanges products, and so the costs for those platforms become cheaper. And I think a big driver is clear and consistent role of government. I think we've seen government try certain initiatives, but not be consistent at those. Or unfortunately, just to the inefficiencies of trying to roll that out, it becomes more and more complex. And I'm glad we will be chatting more about Zambia a bit later. And I think the influence of the Zambian government in opening and then closing borders does provide a more complex way of trying to evolve a free market system. And so really, if we move to the next slide, mindful of the time that's coming along, I think what do we really need to look at is how can we reduce the costs of these risk management products? And so, yes, reliable data helps us price the product more accurately. Also reduces the risk component. And then again, the ability to share risks in a more cost-effective manner is if you're offering an insurance product, where as the insurer do you offlay your risk? As a price risk management system, if you're guaranteeing a certain price, where can you lock in and hedge out your price risk? In the same way, through a clearinghouse, you can obviously remove your counterparty risk. So it's all those more sophisticated mechanisms. As you have a better way to offlay your own risk as a risk management solutions provider, so the cost of those products can come down. And I always like to think, stay positive and see the opportunities. That's an area that we often forget in times. And finally, just really, I think the question to all of you is, do current risk management products address the needs of smallholder farmers? And is it a yes or a no? I know what I view it as, but I think what I'm hoping is at the end of this webinar, we come out with more ideas around, yes, there are risk management products that can assist, but we've also got solutions that will reduce the cost and make them more accessible. And so I leave you with a African proverb that many of you would know I've used across the continent as I've had the privilege of working with a number of different stakeholders, which really speaks to something that at the end of the day is, if you want to go far, you need to go fast. If you want to go slow, you go together. So thank you again, and over to you for any questions.
Fantastic. You actually hit the right buttons to start off with, probably for this webinar. And it's quite a macro level interjection which you have created here. You've spoken about the interventions at the farmer level and what kind of products probably could work there. You've also brought in a concept of how the insurance companies can or the price can actually work together, and then there is a case for the reinsurers as well, including the support which can be given by the governments. So that's interesting, and it's also nice to see you spoke about the Malawi experience. Have you seen something like this also getting evolved in other African countries? That's a very good example actually to talk about.
Yeah, unfortunately, I haven't. I know that was driven largely by a World Bank program, but I guess also the challenge is around finding a price correlation. At that specific time, the Malawian market was very closely correlated to the South African market, and therefore using call options on the liquid JSE was a way of securing product for Malawi. It's not always that simple. I wish it was. To find another derivative market that is closely correlated and reflecting the domestic market. But it doesn't mean that we won't see it happen again. It just needs a big driver behind it.
Okay, okay. Yeah, so maybe you can see probably new more models coming up, something similar to that. Any other you would like to share on what value chains probably did they get affected? Is there a way to improve the value chains with the new derivative systems which you have seen?
It's 7 o'clock.
Yes.
So where the derivative markets have assisted the value chain, I think if you look at the millers, and I'll speak specifically around the South African market, which has been privileged enough to succeed. And there's a number of factors that we can attribute to that success. But ultimately, if you talk to those value chain players, being the processors, that as well as the traders, they would clearly indicate that without a market where they're able to hedge that price risk, it is difficult for them to see the continuation of their business. I think that the millers, if I look at the South African market, the millers were the slowest to adopt. The farmers jumped in very quickly and used it to hedge. But the dynamics after 23, 24 years is that the banks would not be able to offer such cost-effective financing instruments if they didn't have access to a hedging instrument, a derivative market, where there was also physical delivery. And so the biggest, I guess, value chain contributor to the derivative market has been the financial institutions, and the fact that many players now get access to really, really cheap finance when it comes to, particularly once the product is in the warehouse. If it's on the input side, there is slightly more expensive, but there's still innovation in that space. I just wish there was more innovation for smaller farmers. Often these are slightly the larger farmers that are benefiting.
Great. So we expect that probably the next few years we get to see more products in that space, so that access to capital with the smallholders improves a bit. Right.
My last point, Sujay, I think in the next few years, what's exciting to see on the continent is more clearing houses, derivative clearing houses, getting licenses and starting up. If you look at Kenya received their derivatives license. They've started with financial products, but once you have the base of the clearinghouse, that allows you to start evolving that derivative market. And so Nigeria, just towards the end of last month, 2 entities received a clearinghouse from their regulator, the SEC. So I think it's an exciting time for, let's call it organized derivative markets. But we know that the market is always going to be efficient in the OTC space, and it's kind of just how do we become more regulated in time. So yeah, watch the derivative exchanges on the continent.
Okay, we'll watch out for. We'll take your word with that. Thanks, Chris. Thank you very much for that interesting insights which you have shared. The audience can keep on rolling in the questions, either in the Q&A box or on the chat box, wherever it's convenient. We'll try and pick up some of them and then raise it with the speakers here, try and get answers as well. So thank you very much. We'll go to the next session. We're talking about how technology-based insurance can play a role in productivity enhancement. And we've got 2 fantastic speakers in this segment, Dr. Nihar Jangle and Mr. Matthew Dubreuil. So Matthew's slide is there on the screen. So would Matthew like to start then? Otherwise, I thought Nihar would be starting there.
Yeah, I thought Nihar was starting, but as you prefer. I'm good to go otherwise.
Great. So we'll ask then Matthew to, Nihar, is that fine with you? That's great, 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 great. So then, yeah, so then maybe we can start with Matthew. So Matthew, yeah, to start off with, congratulations on the World Food Program Nobel Prize, and you guys have been actually instrumental in bringing a lot of changes to the world. And so yeah, so that's a thing which has to be always noted as well. Matthew has been a microfinance and risk insurance expert for around 1.5 decades and more than that, I think. And he started off his work with Planet Finance and Planet Guarantee at multiple levels, at various locations, as a microfinance specialist. And he's devised strategies and products for the African agriculture landscape for over a decade. Matthew is now with the World Food Program since the last 6 years. He advises them on microfinance and insurance. He provides crop insurance expertise, technical expertise on R4 programs in Senegal, Ethiopia, new countries, new geographies, the new initiatives at WFP. He's also an alumni of the prestigious EDHESE Business School, EDHEC Business School, which is now very great to see. Nice, Matthew. You can start. You've got 12 to 15 minutes for your presentation. Please share your experiences.
Okay.
Look forward to that. Thank you.
Thank you very much. So I'm usually talking about like all the countries we're working in, but this time I actually thought that the example of Zambia was a very good one for this session. So I'm going to try to stick to Zambia, even if I may actually like give the example of a few other countries at some point. Next slide, please.
So Matthew, you can maybe go ahead.
Yeah,
slide,
okay.
the lag would be there for a few seconds.
Yeah, no, it's fine. So in terms of context, and that works for Zambia, but it's true for a lot of countries as well. But so we do work with very vulnerable households and rural communities, and that's very important because they're food insecure and they tend to be even more like vulnerable than what the traditional microinsurance stakeholders target. These communities do rely on rain-fed agriculture, and they are very much affected by lots of risks, in particular drought, floods, bad harvest due to pests and diseases. And that's very, very true in the southern province of Zambia, where we've been working since 2015. And so, for instance, in 2019, there has been a severe drought in Zambia where 2.3 million people were requiring emergency food assistance to meet their nutritional needs. But that was already a very heavy context. But then in 2020, with all these effects and all these problems, we also had the COVID. So it all added on top, the pandemics, the public health measure, so less transport capacities, less access to markets, and so a lot of economical issues on top of the climate shocks, which of course did aggravate the existing vulnerabilities, strained food systems, did erode farmers' resilience to shocks. And so overall, we're seeing a very negative impact on supply chains and on cost of inputs. So it's really difficult just for farmers to continue their regular activity. And we can see and we can expect a lower productivity. But so what do we want in a year of COVID? Like in a context like that, we just don't want that the major climate shock wipes out all the systems that we've put in place so far for the smallholder communities. So I'm going to present like what we've done in the southern province of Zambia since 2015 and how we think that this is actually like helping to cope with this very special situation. So the whole basis of that is that we're trying to help farmers improve their productivity, but also better adapt their farming practices to climate change environment. So we've been working with the Ministry of Agriculture and with FAO to support farmers adopt conservation agriculture measures so that they could actually like maximize their water retention and yields compared to traditional methods. So the the conservation agriculture key principles are basically minimal soil disturbance, crop diversification, and use of organic fertilizers. In total, we're having like 18,000 farmers that have been trained on the conservation agriculture principles in 5 districts of the southern province of Zambia. And so I just wanted to quote what like a farmers was saying, because I thought it was actually very interesting. That last year, despite the drought, we managed to have a harvest because we embraced this sort of conservation agriculture. Families practicing traditional farming had 0. And that's actually very important. But of course, CA is not enough. So we help them to better use drought-tolerant crops such as cowpeas, for instance, or millet, but not so much maize, because maize is actually like very, very risky. But overall, like crops that do mature earlier. Next slide, please. So on top of CA, we're using like other kinds of risk management tools. And that's very important, this integrated approach. First, climate services. We do work with the MATE agency to install like a deeper network of automated and manual rain gauges. We install like 165 in the province. We've been working on training on rainfall measurement to also like better use the information to measure soil moisture, to understand the conditions to plant, so that farmers can actually like reduce their risk exposure just by having like better practices. We've been also like organizing weather forecast workshops with local stakeholders to share agrometeorological information to help farmers make the right decisions, to also adopt to better adapt their crop varieties based on the seasonal forecast to optimize their potential yields. So if we're having like potentially like a shorter period, they will actually like select shorter cycles. We've also been working on risk retention activities, and in particular, the constitution of village saving and loan groups to allow households to better manage their individual shocks, such as disease and medium shock, and build like better investment capacities to actually purchase inputs. We've been trying to work with credit, but for a lot of reasons, it's still like a very difficult tool, because like interest rates are very high, because MFIs are not so much interested in supporting these very vulnerable farmers, because they already have like another market that is a little bit easier to serve, and they're already not serving it like very well. And so for all these reasons, we can only rely so far on the VSL groups to build the investment capacity of the farmers. Next slide, please. And so on top of these tools, we're also developing a weather index insurance system that is to protect the farmers against the most severe drought. And that's a very important point, because we really strongly believe that insurance as a standalone is not efficient enough tool to protect the farmers. And so it has to be very well articulated with other risk management tools to reduce the overall risk exposure, to take like the most medium and individual shocks, such as savings, for instance, and really to keep insurance where we reduce basis risk and where we optimize its use. So for the last 3 years, we've had like close to 8,000 farmers insured through this approach that we call insurance for CA approach. How does it work? It's like farmers are applying at least 1 hectare of conservation agriculture, and in exchange, WFP pays the premium. Like it's the same, it's roughly between $15 and $18 for each farmer. And progressively, we introduce a cash contribution and we increase it so that after a certain number of years, they can be fully graduated and can afford the premium on their own. That's a very important point. And so far, we're roughly around like 20-25% of the cash contribution. But this year, because of the impact of the COVID and the economic impact, we decided that farmers would actually not pay their cash contribution. It would be postponed to next year, so that we're not overburdening them. But we will work with them so that they can actually increase their saving capacities, so that next year they can keep up on their cash contribution increase. We've had like 3 payouts over the last seasons, so 3 out of 5 seasons. And on average, each farmer got $36 of payout, which is roughly a little bit more than than the premium. So that's great. But especially like 1 year, we had like a very high, because farmers got like $55 on average, which is quite high. And so we've also been, so this insurance component is really helping to protect farmers' investment in productivity improvements. So we're really trying to protect the investment in the inputs so that they can continue and quickly like recover their capacity to invest, so that next year they can continue and keep their livelihood and their food security. And as we believe that the COVID would exacerbate the impact of a drought, it's really critical to ensure that farmers have the strongest possible resilience to climate shocks. And thanks to this whole experience, we started to work with the government to actually strengthen their capacity and to strengthen the capacities of local stakeholders at different levels. So on the FISIP program that I believe Nisa will present right after, we're working with the Ministry of Agriculture and all the private and public stakeholders to actually improve the data collection, the transparency, and the index design of the whole program that is currently reaching a little bit more than 800,000 smallholder farmers. And thanks to this opportunity, just one more thing. Thanks to this opportunity, we actually launched a pilot this year with a lot of stakeholders, including Pula, like 4 insurance companies, including Mayfair, the Ministry of Livestock and Fisheries, and IFAD, for livestock farmers. A little bit on the same principle at the FISIP that I just presented before, and so it's a product that is overall built on the approach that I presented before. Next slide, please. And so the R4 approach that we're implementing in like currently 10 countries and mostly in Africa is really based on this integration of these 4 components: the risk reduction aspect that can be conservation agriculture, but it can be asset creation, it can be participation to training on post-harvest loss management, for instance. But honestly, we could also think of training on, health risk exposure measures, for instance. The risk transfer, which is microinsurance, and then the risk retention through the VSLs, and the prudent risk taking. It's not only accessing microfinance, but just like being able to prudently increase the investment capacity of farmers, their income generation, their market access, so that they can get back and progressively be graduated. So what I'd like to say here is that despite the fact that we're in a very specific year, we managed to double the size of our microinsurance portfolio, because last year we had like 100,000 households, and now we're having 200 households this year, mostly in Africa. And so because we're having a lot of requests from the donors, there is a lot of needs from the farmers. Well, we re-pushed our teams with a lot of constraints to actually go to the field to increase this portfolio and to better serve the farmers. We've tried to introduce, I'm almost like finishing. So we've really worked to introduce new tech solutions to better reduce also the risk exposure of the field officers, because that's also very important. So as a conclusion, I would say 3 points. First, that we need to push the integration further and the risk layering to not only have insurance alone, but to better integrate, for instance, forecast-based financing, to integrate sovereign insurance as well, and also like contingency funds to better protect smallholder farmers. There is also a need for a social protection approach, because the most vulnerable otherwise may not be properly served by the market alone. But we need to find this right balance between leveraging the public sector, but also the private sector, because without private stakeholders, it's just impossible to work there. And so we need to have like a very strong commitment from all of those. And then, well, we need to work to set up the right tools and the right systems, and not, like not work on like small pilots. But then when I see like this major FISIP program, you can see that all the stakeholders are really working in one direction to better help farmers, well, be more resilient and more productive. Thank you very much.
No. Sujay, I think you're on mute. Yeah.
No, so, yeah, so now this is fine. Correct. Thanks. Yeah, thanks, Matthew, for that wonderful presentation. You spoke about the R4 model, which is quite interesting. It talks about building resilience with the cultivation systems of farmers. Conservation agriculture is quite interesting to see. And then taking them up to the level where the risks are mitigated to a certain extent, and then bringing in the support of the policy holders in that place. We've got a couple of questions, but I think we'll take that after Nihar is able to do his session, and then we can do the question answers together for both of you in this case. So yeah, hi Nihar. We'll start with you. We've got everybody. We got Dr. Nihar with us. Dr. Nihar is the risk management, risk insurance sector. He's been there since 1.5 decades. He's been addressing climate risk challenges and designing risk mitigation strategies for communities at large across continents. He was the director of Climate Risk Change Program at Microinsurance Academy. And thereafter, he has been the advisor with the German development agency GIZ since the 3 years now. So Nihar has been instrumental in bringing innovative risk management tools for smallholder farmers in Zambia, which are now being considered as new models of risk insurance for smallholder farming. Nihar is a postdoc from Freie University, Berlin. Over to you, Nihar. We'll try and keep the timelines intact there, please. Thanks.
Yeah, thank you, Sujay, for the introduction, and thank you for WRMS for the invitation and giving me the opportunity to present on GIZ's experience of working on agriculture insurance in Zambia. Next slide, please. So we have basically seen that agriculture is a risky business, and that it is becoming more riskier, we can see as well in the future. If you know to build up a sense of urgency, you can see on the left-hand side that the number of weather-related events all over the world has been increasing. It has been increasing in Africa. It doubled over the last 20, 30 years. And if you look at the economic losses, they are also increasing, and most of the risks are still, especially in Africa, uninsured, to look from the insurance perspective. And the key drivers we also see when we look at risk and when we look at climate vulnerability is that, okay, the level of hazards are rising, the population is growing, the economies are growing, so also the assets at risk are increasing. And this puts, in fact, a lot of countries in Africa into the list of the most vulnerable countries towards climate change. Next slide, please. So what has to be done is to address the challenges of the farmers and the risks in different ways. And we have seen that Chris looked at it from various angles, production risk and let's say price risks. Let me look at it more, let me look more at the production risk, I would say. Though I have been working only on insurance, I would acknowledge, and I think previous speakers have acknowledged it as well, an integrated approach towards risk management is required. And there are several things that can be done. I'm not an expert on it, but I'm still going to say, typically you would do on-farming risk management. And there are things like Mathieu mentioned, like the conservation agriculture, or the right selection of the crops, or changing the way the crops varieties are typical on-farm risk managing practices to manage the production risk. these are all non-financial methods. There are also more indirect ways you can diversify the sources of income of farmers, to give another example. But there are also challenges to these common risk management practices. And to give an example, some coping mechanisms rely on reducing the investment, and smallholder farmers often do it to some extent, reduce the investment in farming to mitigate the risk. At the same time, they reduce their potential income as well. Another challenge is that widespread risks can be addressed to only a certain extent, like droughts, but not fully. So there is really a need, and it has been stressed by the previous presenters, by Chris and Mathieu, to also include financial tools for risk management. And this could be on different levels. You can have on the national level sovereign risk pools. You can have access to contingent credit. And on the farm level, the typical things would be saving, ideally, savings, access to credit, but then also micro-level insurance as well. Next slide, please. So Mathieu also said it nicely that a risk layering approach is required. And how could it look like? The traditional one is, which you can see here. So for the very frequent events with low severity, you do on-farm risk management, you do savings, credit. But when it comes, and risk retention, when it comes to risks which are a little less frequent, so a little bit rarer, but have a higher impact, this is like a situation where insurance or micro-level insurance comes in, or agriculture comes in and is best placed. Still saying that it can only complement or build upon the other risk reducing measures. And then you look at the very rare events that have a huge impact, like heavy droughts or large floods. You come to a level where you have to have government solutions, net cat bonds, sovereign risk insurance. Also, you know, you also come to the level where you have net cat bonds I mentioned. All these kind of things come in, and also humanitarian aid eventually. Next slide, please. So, but in this niche where, you know, insurance is, I would say, best placed to complement other ways to manage production risks, we have two things. You have on the one hand the financial protection character, and you have on the other hand the promotion character of insurance, the promotion for investment and growth. And you have it, to give an example, on the micro level insurance. If a financial protection here means that the household income is smoothened, and that you ideally prevent that farmers have to apply negative coping strategies. But the other thing which I consider is equally important, why insurance is helpful, is the promotion character. If people can manage their risk better, if they understand that they can do it better through insurance, they will adopt a different behavior. They will invest more into the farming activities when they know that they can, you know, secure that bigger investment better through insurance. So you can come to a higher investment, higher return farming ideally. But you can also have insurance on the meso level where you say, okay, there are agribusinesses, there are microfinancial institutions. If they buy a portfolio cover, they have the financial protection of their portfolio on one hand, but on the other hand, they also have a promotion character, meaning they might be encouraged to extend their business to more riskier regions or customers. Next slide, please, which is also from the you know, inclusive character, financial inclusive character, very important. Now coming to GIZ activities in Zambia on agriculture insurance, our approach was in this country, not in general, but in this country, to focus more on private sector approaches, to replicate and scale up sustainable agricultural insurance model. And by that we meant, yes, it is for smallholder farmers, but you have aggregators that act as distribution channels, like contracting farming operators, seed companies, cooperatives that have the trust of the smallholder farmers and are basically willing to resume certain roles. Now, particularly we address supply side and demand side challenges. On the supply side, often you face the situation that the capacities among the local insurance companies are still often limited, so capacity building is needed. particular to design new products. On the demand side, you have the challenge that people, would not know enough about insurance, so you don't have active follow-on demand for insurance. There, you have to strengthen the understanding of the smallholders for insurance, and this is typically done through, building the capacity of the distribution channels of the aggregators who are responsible for awareness creation and enrollment and these kind of activities. In Zambia also, we plan to complement risk transfer by risk-reducing measures like providing access to climate risk information, climate risk services, which could be anything like weather forecast and enriching it with basic farming advices. Next slide, please. So overall, I would say from my experience, the real key, if you talk about smallholder farmers, not commercial farmers, are the aggregators. The aggregators go the last mile. They have the trust, they have the outreach, which insurance companies often don't have. And you have a wide range of possible aggregators. It could be financial institutions, contracting farming operators, seed companies, cooperatives, or government schemes. So in Zambia, for example, you have the Farmer Input Support Program, where the index insurance is linked to it. It's also an aggregator. Now, the role of the aggregator would be awareness raising, marketing, enrolling, claims to pay out distribution. So they fulfill certain roles, and it makes it for the insurance companies easier, and it reduces their operational costs. Next slide, please. And to give you one example, which we particularly supported in Zambia and found particularly sustainable, is the channel of contracting farming operators. This is in the cotton sector in Zambia. So you have the off-takers or the contracting farming operators that at the beginning of the season provide an input package to the smallholder farmers on a loan basis. And here they provide a box. I mean, farmers can choose, they can take an informed decision whether they also want to enroll for weather index insurance or agricultural insurance. And the entire input package, as well as the insurance, is pre-financed. And at the end of the season, the off-taker goes to the farmers and purchases the cotton, and with the sales proceeds, the outstanding loans are settled. But also the insurance payouts are settled at that moment. So it's an easy way to integrate the insurance processes into the processes of the contracting farming operators. But surely the field staff has to be trained to do that. But why would an aggregator do that? That's the key question, right? It's clear what the insurance company has out of it. It helps them. It is hopefully clear that the farmer has something out of it, which is the access to insurance. But the aggregator also has to have a key interest. And what we have seen is with contracting farming operator, it has the potential to really strengthen the core business of that company. Why? Because it could increase customer loyalty to the smallholders. It could increase the cotton uptake because an insured farmer might decide to cultivate cotton not only on 1 hectare, but on 2 hectares. And it has also the potential to reduce side selling, which overall gives the business case why aggregators are interested in providing this insurance. Next slide, please. So the results that we have achieved through our activities are basically that the knowledge of aggregators on agricultural insurance has increased. Agricultural insurance as a risk management tool, that more aggregators are offering their smallholder farmers insurance. When it comes to smallholders, through our activities and also of other bilateral and multilateral organizations, we see that the knowledge of smallholders about agricultural insurance has increased, and we try different tools, the classical print media, but we also used other awareness tools like interactive voice responses in local languages that even illiterate farmers could use to learn more about weather index insurance. And we implemented several activities like training modules on agricultural insurance to build the capacities of insurance companies to pilot new schemes on agricultural insurance and design products. Next slide, please.
May I have a minute or so more, please?
Sure. Now, the lessons learned is, like I said initially, the aggregators are, according to me, the key, and it means to identify how does their business work, how could insurance help them to de-risk their activities. and which requires, once they buy into the idea, training their staff. Education of farmers is important, obviously, to come to a demand, but this also requires that the aggregators fulfill that roles, that the field staff is trained. Bundling, I think, anyway makes sense to never do insurance as a standalone. Bundle it with agricultural inputs, other financial products, other value adds, or life insurance, or hospicash. Next slide, please. This really helps to foster demand. What we have seen, especially with the cotton contract farming, is that pre-financing, but not subsidizing, pre-financing the premium helps to solve the liquidity constraint and can have a big push on actually demand or uptake of insurance, much bigger than normal premium subsidies, often, as examples in other countries show. And the last point I wanted to say is that there might be challenges in the market. We have seen it in Zambia or in worldwide. When the market price for cotton dropped, Zambia was impacted, the margins shrank for smallholders, and the businesses, agribusinesses, also had to struggle. And in these cases, yeah, you have a problem that insurance might not be on top of the mind of the aggregators, but also this has to be overcome to you basically look at different insurance products for different agricultural value chains. Yeah, thanks a lot. This was a presentation from my side. Over to you, Sujay.
Thank you, Niyar, for actually bringing in the perspective that you've got something new. I mean, involving aggregators as one of those key players in offering a risk mitigation product for the smallholder farmers. That's interesting to see how it will get propagated across other areas as well. And we've got a few questions. Maybe we can have a couple of questions now for both Nihar and Matthew. So one of those questions which came in a bit early was, I mean, there's a question which says that are there any uptakes for crop and livestock insurance? It's from Davies. He says that an uptake for crop and livestock insurance, which is slow in value chains. So what are the strategies being adopted in increasing the uptake for this by the smallholder farmer? Anyone can answer this from both of.
Well, I can start if you want. Well, so what we've seen, it kind of really depends on the type of product. I think Nihar represented a lot of different kinds of products that are very interesting, like the meso approach, for instance, to really like aggregate a lot of farmers. But if we take what we see in Zambia, for instance, we have like on one side what we're doing to actually target most vulnerable with a social protection approach. So we actually like consider that the premium is a transfer modality, like if they were receiving like food or cash, for instance. And so it really like helps serving a market that otherwise is untapped or unserved by market players. And then we have like the FISIP approach, which is a very interesting one because the government, the Ministry of Agriculture, is actually pre-financing the premium to the insurance market. And then they're recovering the premium through like the contribution to the subsidized input package. And so thanks to that, they're insuring like more than 1 million farmers today.
Yeah, I think that's it's a good analysis. There's if you look at the social security approach, it's a different one than a private sector, a purely private sector approach. And then you have the approaches like FISIP, where you have it linked to a government scheme, which has a social security aspect as well, and where the insurance is linked in a mandatory way. That's a good way to reach farmers, that's for sure. I think we have been focusing on private sector approaches, and we have seen voluntary uptake is there. It is not quick, I would say that's true, but that's what I try to say. You have to basically get all the players aligned: the insurance company, the smallholder farmer, the aggregator. And the aggregator could be also a government scheme or something. And with the private sector players, I think it's really I would not, you can have the traditional partner agent model, they earn a commission, but in Zambia, in the cases I've been working and I've seen, it is important that they see it adds value to their business to do what they need to do with the smallholder farmers.
Okay. Then
They will get engaged. Otherwise, they will tomorrow stop doing it if they are, have different priorities.
Very fair, very fair. There's another one, very interesting. It says that the government intervention through subsidies in the form of seeds and fertilizer and price setting has had a negative effect on production. In effect, how can that be balanced? Is there a way to balance that? Nihar, would you like to take that?
Let me have to think about itself. Subsidies in form of seed fertilizing has a negative. Yeah, I mean, these are big. I would say I don't have an expertise to really answer that because I have not working on these topics, and what kind of impacts the government intervention has for subsidies, I don't know. So I was trying to say, relying more on private sector approaches, where I did not get into this because the challenges of government intervention or subsidies is a little bit, you have two things. The government has the interest to support their population. That's the mandate of any government in any country. Right. But it often gets schemes, I'm not talking about Zambia or any country in the world, it gets politicized, elections coming up. And what I would say is, with subsidies in general, the important thing is not to send wrong, incentive. The incentive should go towards higher production, not towards, shifting into the wrong crops or these kind of things. But it's a very general answer. I'm not an expert, so maybe I pass it on.
No, so yeah, so maybe at the end of it, we'll put it up for as a discussion question point. Yeah. But yeah, so now I think maybe we can go to the next session 3. It talks about what solutions the insurance companies are offering, any innovations which are happening in the space of agriculture risk solutions, management solutions. And we have with us Lisa Banda. She's from Mayfair Insurance Zambia, and she's an index insurance analyst, very well known in this segment. And Mayfair would have come up with various innovative products about this segment. So Lisa, yeah, so Lisa has been serving with Mayfair since September last year, 2019. Her core responsibilities in Mayfair service lies to smallholder farmers. She manages the company's index insurance portfolios from product development to execution. Prior to her engagement with Mayfair, she has worked with the insurance sector for more than 7 years in general life and health insurance. She's quite known. I mean, she's got a reasonably good hold of the portfolio there. And she holds a bachelor's degree and a major's in applied economics and minor in statistics and actuarial science. So yeah, hi Nisa, you have about 12 to 15 minutes good to go.
All right, thank you so much for having me. Happy to be here. We can dive right into it. The first slide, please. Okay, so since Mayfair's inception in Zambia, we have identified a gap of insurance knowledge and lack of accessibility of affordable insurance services for smallholder farmers, which obviously has been spoken about by all the previous speakers. In 2013, Mayfair, alongside some other partners, had the privilege of insuring 1,500 farmers on a pilot basis. So this is when we had decided to start with the weather index insurance, just as a pilot. And of course, there were triggers and there were payouts that also, which allowed us to gain some confidence from the farmers, and also just for people to understand how it was beneficial for them. So of course, the importance of insurance came as a result of the changing climate and the risks associated with the changing climate. But I have come to see that in the wake of COVID-19, the measures we've put in place have also been beneficial in this situation. So like Matthew and the previous speaker also spoke about, the Farmer Input Supply Program is a subsidy farming inputs program, which is 81% funded by the government, and then the farmers also fund part of it. And we have been privileged to be the insurer working on this program. Next slide, please. So while we have been doing this for a while, I decided to just focus on last season. So in the last farming season, we covered farmers who have been growing soybeans, maize, cowpeas, legumes, cotton, groundnuts through a number of distributors, as you can see on the screen, who are both from the government and which is under the Farmer Input Supply Program, and aggregators with the private sector. The perils that we're covering were drought and excess rainfall, and we covered a total of 946,832 farmers. All these farmers were actually dotted across the country. So covering a large number of farmers obviously comes with its own challenges, and based on our experience, I'll highlight some of the things that we have done to try and mitigate these challenges. Next slide, please. So among these challenges, like I said, most of the speakers have already highlighted these, so I'm just going over them and I would just summarize. Most of the challenges that we faced obviously is awareness among the farmers and a good understanding of the product, while we as Mayfair are sort of short-staffed with regards to reaching the farmers across the nation. Obviously, we do training of trainers who work with the government and through the aggregators that we work with. So these people are supposed to help us with disseminating the information. Like Nia have mentioned, they're the people that the farmers trust because they interface with them more. However, we have found that there's still information gaps with the understanding of the product. And because of this, we have decided to, in partnership with certain organizations who have have good working ICT solutions, we have created some ICT platforms that the farmers can interact on. For example, we have one platform where they dial a USSD code and they get to learn about insurance. It's a short course. It's provided in multiple languages, including English, but 8 local languages. So people are able to learn about what weather index insurance is and what is covered and which is the period of cover. So that way the farmer is able to have access to this information from their mobile phone. And also we send out mobile messages throughout the season just so they can know what the weather patterns are like, whether they should expect a payout or not. So this allows for us to be in constant communication with the farmers and working with the government, who already have a large database of farmers. For example, the Ministry of Agriculture has a database of over 2 million farmers, of which half of those have been insured. We are also able to reach potential customers through those platforms. So in the wake of COVID, it also allows us, in the wake of COVID, obviously it's difficult for us to interface, but through these platforms, we're able to reach the farmers. Also, with the support of GIZ in the past, we've been able to distribute some flyers and brochures in multiple languages and have radio programs that allow us to reach the farmers with all the information that they need with regards to what weather index insurance is and what is covered, etc. And then the other challenges, one of the bigger challenges we've faced in the past is obviously receiving premiums. You know, when you're insuring over 800,000 farmers, it's very difficult for you to obviously go from door to door to collect your premiums or have them come to a central location. Mayfair has a bit of a footprint within the country, but we're not in all 10 provinces. So obviously we had to think of ways we can collect these premiums efficiently and before the season begins. So previously we would use our distribution channels like Ministry of Agriculture to receive these premiums and then distribute them to our reinsurers or whoever we have partnered with in that season. However, we found that sometimes it would take a while for us to receive these premiums. Ideally, with insurance, you should receive the premiums before the season began. So we have had to think around ways to make this a little more easy for both us and the government. So what has been developed is a module on their accounts where premium payments go into a specific bank account. So basically the premium is ring-fenced before it reaches the main before it reaches the main government bank account. So it's ring-fenced in advance and set aside for insurance when the farmer pays their part of the contribution towards the farmer input supply program. So that way we receive our premium on time and we're able to service the client efficiently. And when it's time to make claims payments, we have been given access to a Zambia information system where we upload the payments, and once they're approved, the payments are activated in the farmers' vouchers and they're able to access their inputs if they have suffered a loss during the season. So that way it's been a little more efficient than it was in the beginning. So obviously we're constantly learning and we're constantly looking for other solutions in order to serve these farmers better. Another example that I'll use with regards to premium collection is the World Food Program. With the World Food Program, we have had, we also developed a short code. This one is a lot more efficient because the farmer doesn't even have to move from their home. So we partnered with one of the local mobile network providers, and they provided SIM cards to these clients, and the farmers are able to dial a short code and they're able to make their premium payment which goes directly into Mayfair's bank account before the season begins. And once that payment is made, obviously their cover is active. And at the end of the season, if there are any triggers and any payments need to be made, those payments are made into their mobile wallet. So this has made it very efficient for us to work with our farmers. Of course, we're not ignoring the fact that connectivity and access to mobile devices can be a challenge for some people in the most rural parts of the country. So yeah, even when we have provided a USSD code that doesn't require the use of internet, we do acknowledge that some people just don't have phones. So we're constantly trying to find solutions for these clients. So an example of what we have done is in this season, we're working on a pilot with one of the companies that has good mobile network solutions, where we'll place devices in the agro dealers, where when the farmers are buying inputs, they don't necessarily need to be affiliated with any aggregator, but when they're buying those inputs, they should be able to also purchase their insurance. So that will allow us to also reach more people, because we do understand that there are many other people that we can reach. I can see already on my next slide. So it's been very key for us to have good and strong partnerships, because obviously working with large numbers of farmers, like I mentioned, we have over 900,000 farmers that we're insuring, and staff capacity of Mayfair is about 30 staff, and only about 4 of us are working on this project. It's essential for us to have solid partnerships who have similar goals and are experiencing and have the same interests in making sure that the farmers are performing at their highest capacity. So with the government, of course, we're working through the Ministry of Agriculture, and this has been beneficial because obviously they have a large farmer database that gives us access to the existing clients that we have and potential clients for the future. So this allows us to disseminate information, and also the government extension officers who are the staff of the government. So these are the people that we work with to train, and when we train them, they disseminate information to these other to the farmers. So they're a very key component to our distribution value chain, because they help us with enrollment, premium collection, and farmer sensitization. Of course, we are trying to lessen the burden on them by using digital platforms, but they have been of a great help in the past. And of course, the government has the volumes, as they have many people that are registered on the Farmer Input Supply Program. And obviously it's easy for you to do work in any country if you're working closely with the government. So that has been very beneficial for us as Mayfair Insurance and all the other insurance companies that have had the opportunity to do so. Non-governmental organizations with the private sector, we've been working with the World Bank, who provide us with capacity building, FSPZ, which is Financial Sector Deepening Zambia, who are championing financial inclusion in insurance, among others, has also been great in capacity building and also just increasing the efficiency with which the government is able to provide the solutions. Of course, WFP, like Matthew had mentioned, they offer a bit of a subsidy to the farmers, which allows the farmers obviously to take on the insurance at a cheaper price. So also reinsurance are also a very key partner in our delivery of this product. So it's been a good journey for us, and the partnerships have really strengthened and allowed us to reach a lot of people. With regards to other products, apart from the weather index insurance, which is obviously crop related, we are now embarking on a new product, which is the index-based livestock insurance, which obviously will be covering livestock in certain about 8 provinces in Zambia. Matthew had also mentioned briefly on that. So this is being launched this year, and it's a pilot product. So I guess we'll be able to also speak more on it the next time we hopefully have this. So we would like to cover farmers in all aspects and make sure they're covered adequately. Next slide, please. When I spoke to Sonny yesterday, he had spoken about Social Security, obviously, which is important. Obviously, Social Security is primarily accessible to people in the formal sector, which is obviously unfair to an extent, where farmers don't have access to a pension after they retire from their farming, or whatever the case may be. So the National Pension Scheme Authority of Zambia has actually approached us to work with them on a bundled product where whether index insurance is included, pension is included, just to cover the farmers, a pilot started last year, though the weather index part of it was only included this year. So you can see that many organizations are looking to offer a comprehensive solution to people from all walks of life, both in the formal sector and the informal sector. And that way there's also there's an element of financial inclusion for all people who would like to access these products. And yeah, I think that's all from my end. Unless there are any questions, thank you so much for this opportunity.
Thank you, Lisa. You've been very crisp and in time. Will be great, I think, to hear more from you, especially with the new innovative products you showed at the end, and then the interventions which you brought at the farmers level, and with the support of the government and the reinsurance companies. So we'll be able to watch out for that as well. What we'll do is there are a couple of questions for you, but maybe we can, bring in the last session, and then we have questions for both the sessions together.
Sure.
Yeah, we'll do that. So,
No.
so the last session is now, the fourth session is with us, especially talks about AgTech and whether AgTech has been able to manage the risks and address the risks well. We've got Sonu Agarwal as a speaker for this particular segment. Sonu has been a first-generation entrepreneur, and he's an alumnus of IIT Kanpur and IIM Calcutta. He's passionate about technology, finance, innovation, and he's also a member of the Global Association of Risk Professionals. His penchant for collaborations has helped WRMS undertake great path-breaking work in the areas of smart and sustainable farming, climate risk management, insurance through partnerships with large corporations, governments, and international donor agencies. WRMS has done quite well in the last 1.5 decades under his leadership. Sonu, yeah, you can have your presentation. We'll do about 12 to 15 minutes for your slides. Thank you.
Thank you, Sujay. Am I audible?
Yes, please.
Yeah, so thank you. Next slide, please, Anuj. So quickly about WRMS, we are an agriculture and dairy risk management company. We specialize in integrating various kinds of technology with financial products, primarily to protect farmers against agricultural risks and also help them earn more. So that has been our primary objective since the last 17 years. And today in my presentation, I would like to show some examples how technology integrated financial products are making a change. Next slide. But before that, I would, while we primarily work in South Asia, but we have had a steady, small but steady footprint in Africa. I think we, along with our partners, helped in creating the stage for launching index insurance products, particularly in Zambia, Malawi. We tried doing that in Mozambique as well, but were not as successful. We have put infrastructure in a few countries. And since last few years, we have been working with a few agriculture companies, input companies, to launch index insurance products and other crop insurance products, which can scale up in Africa. Next slide, please. So, talking about technology-based financial innovations, I think the primary example is index insurance, which earlier speakers have talked about. But executing index insurance contract is complex. You need all kind of data sets, weather data sets, yield data sets, satellite indices. Getting and collating all this becomes very complex for any insurance company. So what we have been able to do and not only us, many other service providers over years, we have been able to integrate all these data sets collected from various sources, from weather stations, satellites, clean them up, reduce or eliminate the basis risk between various data sets, and then make the data available on a simple platform for an insurance company to create a product. So that has been the role of technology in this space. So in many countries today, the insurance companies don't have to worry about the weather data sets or the satellite data sets. It's all available on a simple technology platform. They can choose their locations, and they can structure their contracts, calculate the historical losses, and try to arrive at a premium based on this analysis. Next slide, please. So while a previous slide, Anuj. So while designing these contracts, you have to eliminate basis risk. Next slide, Anuj, I think. I think that is.
It's 8 o'clock.
So what we also do is that the claim data, when you structure an insurance contract, you also need to monitor the claims. So all this data from the weather stations and satellite is collected on a real-time basis, based on which one can calculate the claims on a real-time basis, and one can inform the farmers on what's the claim status on a smartphone application. So this is made possible through technology, and NISA was also talking about such technology platforms being used in Zambia. Next slide, please. Yeah. And while designing contracts, one of the challenges in index insurance is to eliminate the basis risk. One really has to, the farmers are basically looking for a cover against yield losses, and since you do not have historical yields, and there is no way to assess the yields on a real-time basis, so you use some proxy indices like weather and satellite indices to estimate the yield. So you need analytical tools to understand why that yield fluctuation is happening. Is it happening on account of weather fluctuations, or is it happening on account of pest indices? So all these analytics can now be done online in any country, and one can analyze, and based on that one can structure a good insurance contract where the basis risk would be very low. Next slide, please. And talking about claims, one can also understand them using the satellite pictures, where the losses are happening, how much payment should be made. All this can be graphically seen, can be shown to the farmers or the policymakers, that how the index is performing vis-a-vis actual losses. So technology, I think, has played a crucial role in making index insurance simpler, making it much more scalable now across various countries. Next slide. But our experience in many parts of Asia and Africa has shown that the farmers are looking for more. They are looking for covering risks more comprehensively. As Chris had explained earlier, they're looking for a cover which covers farm level yields. It covers risks related to storage. They need a cover for guaranteeing an income. So it's a combination of yield and price, which they want themselves to be protected against. Next slide, please. So technology is making that happen, so there are some insurance contracts which are happening in some parts of the world, especially in South Asia, where WRMS has played a pioneering role, where a comprehensive income is guaranteed to farmers. So for example, in this contract which we are showing on the screen, the farmer is guaranteed of a minimum yield. In this case, the crop is chili, is being guaranteed 2.5 tons per acre, provided that he follows a certain set of practices which are written down very neatly. And in some cases, the price is also assured. So in this particular example, a price of rupees 30, Indian rupees, was assured per kg. And so with a minimum yield guarantee of 2,500 and a price guarantee of 30, the farmer is assured of an income of rupees 75,000, which covers his cost of cultivation and earns him a reasonable return. So this contract is basically offered to the farmer, and technology plays a crucial role in making this happen, making such contracts available to farmers. Next slide, please. And so the foundation of such contracts is an analysis which tries to understand what factors or what interventions can actually improve yields. So in many cases, we have seen using historical data sets, we see that if better irrigation is given or a better seed variety is chosen, or in some cases pest and diseases are managed better, that there could be a significant improvement in yields. And these factors, are then basically monitored through technology. Next slide, please. So for example, let's say if the analysis shows that a particular seed variety has to be chosen to improve yields, and the seed has to be sown at the right time and at the right distance, then what is done is that some kind planting machines are used, automated planting machines are used to plant the right seed variety at the right distance. And each of these equipment, these machinery, have a vehicle tracking system to understand, whether actually the planter was used in that farm or not, and at what distance was the potato sown. And these pictures are made available to the insurance company, which helps them understand that the farmer has undertaken that intervention, and to that extent he has complied with the requirements of the contract, and the required yield can be guaranteed. Next slide, please. Likewise, in many cases, irrigation becomes very crucial. Irrigation at the right stage becomes very crucial, and using various kinds of algorithms, one can advise the farmer on when to irrigate. And using then again satellite pictures, one can know whether the farmer has irrigated the field on time or not. So this can be done on a very real-time basis. And if the insurance company knows that the farmer is irrigating the field on time, then they are assured that yes, the yield can be guaranteed. Next slide, please. Likewise, using pest sensors, one can understand the pest load in a particular location. And by monitoring the weather, one can forecast what could be the particular pest load in a given farm or in a given area. And if there is a pest forecast, the farmers can be advised through smartphone applications to spray, to apply preventive spraying in that crop. And in many areas, we are able to mobilize spraying machines, to those farms where sprays can be done. And again, as in the previous example, these spraying machines are equipped with a vehicle tracking system, so the insurance companies know that yes, the farmer has sprayed the farm on time, and can be assured that the farmer can be guaranteed a yield. Next slide, please. Again, using weather forecasts, one can forecast the weather, and if these forecasts are generated at a village level, you can now forecast with a very reasonable accuracy the weather for the next 7 to 10 days. And if there is an adverse weather event, the farmers can be advised to take the necessary preventive action. So if there is a forecast of heavy rain, the farmers can be prepared to drain the farm after the rains happen. And we have seen in many cases there is a huge saving which happens because of these preventive measures, which helps in ultimately reducing the cost of insurance or other risk management products. Next slide, please. Yeah, and once in a particular area, through all these interventions, if the yield can be increased and the right quality is produced, it incentivizes the procurement companies to put processing units or cold chains at the farm gate. And so what happens then is that if the procurement companies know that there is a minimum amount of produce which would be produced in that particular village, they then using various government subsidies or investments available from co-investments available from the government, they're able to put these processing centers or cold chains, which improves the shelf life of the produce, and which in a way also helps in getting a better price, or since the procurers are assured of the right grade, they are also able, and the right grade and the right quantity, they are able to assure a price also to the farmer. So in many areas where the commodity exchanges are not available, or in such cases, the assurance of a price from a big procurer helps in reducing the price risk. And if that arrangement is there, that price assurance can also be built into the insurance contract. So some of these new experiments have started in some countries, and agricultural technology is playing a crucial role in making this happen. It's basically because it helps in monitoring, it helps in giving the confidence to the insurance companies that the required preventive measures are being undertaken in the field, and to that extent they can be assured of the outcomes, of the risks are reduced. So I'll stop here, and we can take questions.
Thank you so much. You've been exactly on time. So that's very well put. There were a couple of questions, maybe because when Lisa was also there, so there could be a couple of questions for her, and then you, and then maybe we can open up for everyone. So Lisa, if you can probably elaborate, you've been able to stitch together partnerships with the smallholder farmers, and then there's the support to the social sector, the government, the ICT players, and also the reinsurers. Have you been able to, replicate this, or is it still at a pilot stage? Lisa, are you there?
Oh, sorry, I had my mic was off. Could you just repeat your question?
So yeah, so I was saying that since you have been able to create a solution for the smallholder farmers by stitching up relationships between partnerships rather between the government, the reinsurers, the social sector, the developers together. So have you been able to replicate this elsewhere, or is it still at the pilot stage?
So we've replicated with the policies that we already have on our books. And for the other indices, it is still in the pilot stage. So we do get support on the various, from the various partners on the different policies that we have.
Okay. Okay, so that helps. I think probably then you'll have a great case to probably take it to other areas as well, because this works out well, that it will be a full and launch product, right?
Yes.
Sonu, you've been able to bring in the various dynamics associated with the insurance sector and how the value chains get integrated along with it, right up to the complete front-end deliveries. And you've said that there is a case for this existing. So any elaborations on this particular point?
Right, Sujay. So these are new experiments. About 25,000 farmers have been covered. I wanted to show this as an example, so that this is possible. This, still it's early to draw any conclusions, but there are merits in this kind of program, because the farmers, if they take the right undertake the right preventive measures, there is an enormous reduction in risks, which also helps in lowering down the insurance premiums. So if such a program is launched, it's very cost efficient. It's cost efficient for the governments also, in case they are subsidizing such programs. So there is a merit in doing such pilot projects. But yes, as I said, there are 25,000 such farms which have been covered, and there is still more to do. But I wanted to elaborate. Why I picked this example is to just show that what technology can do, how it can help in creating new solutions and managing risks more comprehensively. Nihar and Matthew showed how aggregator is so necessary in providing risk management products. And the aggregator also, plays a key role in delivering other services. The aggregator, manages various risks on the ground. So if using technology, he passes on this right information to the insurance companies that, look, I have undertaken these measures, and the insurance companies get the confidence that the right measures are being undertaken, they can create new products, more comprehensive risk management solutions. So the idea was to give an example that what all technology can do.
Yeah, thanks. Maybe we can now take in questions from the audience. We've got participants who've been posting in their questions now. So we can include all of that. And we can also, I would suggest that, because this has been a very interesting setup where multiple facets were introduced and new innovations were brought in. So even the panelists, if they have their own observations or questions, they can raise in between as well. So one basic thing which came up, and there's a participant who's raised this, is that the majority of insurance contracts are drafted in very complex legal jargon, not understood by farmers. So why can't we make it easy? Can someone, yeah, it'd be very interesting to see. Can someone answer this, please? Any of the insurance guys?
Hello, can you hear me?
Yeah, Nisa, go ahead, please.
Okay. So we do understand that, obviously, like you said, it's jargon. Not everybody will understand it. So, as has previously been alluded, the use of the aggregators helps with reaching out to these farmers. So we will sign an agreement, say, between ourselves and the government. So we're able to have these legal agreements, and then they're the representative of the farmers. That way the farmer doesn't necessarily need to have a direct agreement with us. I'm not sure if that makes sense, yeah.
Okay, so maybe the aggregator is going to be the
So
person who will explain it much more better in his own language.
yeah, so they now then explain it in more simpler terms and just a summary of what they're entitled to and under what circumstances they will be paid. Then the other back work of the more detailed information is handled between the aggregator and the insurance company.
Right. Matthew, you have a thing?
Yeah, so just we've worked a lot to actually like simplify even like the master policy, so that it's like short enough. It has like, you know, limited exclusions, because it's always something that insurance companies love, you know, to have like exclusions that can almost like not happen in this context. So we've tried to simplify it a lot, and also in this membership form. So the extension of the group policy to the farmers. We also include something that I think is very important, is the historical payout years, so that farmers can actually like kind of sign off on the performance of the index in the past, and so they kind of better understand like how the index would actually do behave in similar conditions. Over.
Yeah, I think that will help in easing out quite a bit of that trouble which they face. Thanks. There's a question for you, Sonu. The question is that will the small scale storages like the cold storages talked about work in rural India because of large production, and can the PPP model work? So I'd like to answer that.
Yeah, I think there are cold storage solutions of various sizes, right from storing vegetables for up to 5 to 10 metric tons to 30 metric tons to 100 metric tons. So basically, one needs to look at what's the requirement. There are cost efficiencies if one puts a larger scale storage. The micro cold stores tend to be little more costlier. But if you have the right road connectivities, and if the farmers in a village can travel a distance, let's say up to 5 to 10 kilometers to store their produce, then it makes sense to put up a little larger sized cold storage unit, which could be up to 25 metric tons to, let's say, 100 metric tons, which is more cost efficient. So to answer this question, there are different solutions available, and depending on the context, one can structure a solution. But the larger the storage is, the better it is cost-wise.
Right.
And PPP model, certainly, because the governments, as Chris also pointed out earlier in his presentation, the government role, and NISA also, if you look at the Zambian example, the role of the government in promoting risk management mechanisms is very crucial, because to deliver these risk management solutions, scale is very important. And initially, in many developing economies, the scale is not there immediately. And so the programs need to be subsidized in the right way. Not always subsidies should be given financially, but there could be other ways the governments can intervene and play a role. And their interventions can reduce the setup costs, which the private sector companies need to put up. So to that extent, PPP makes a lot of sense, and wherever risk management solutions have grown and have delivered an impact, there has always been an element of PPP. Others could comment on that as well, but that would be my take on this.
Yes, thanks, Sonu. Maybe Chris can add a bit. Chris, you've been working in this macro space in the African subcontinent for quite a few years, and you've been exposed well to the policy setup and the establishment along with the farming community. How do you see this as a way forward, or even probably tweaking of this model to become more inclusive?
Yeah, I think, the challenge still lies with, if I understood the question correctly, was, the government and the role of government is crucial in setting that enabling environment. But what I've often come across is the government is sometimes challenged by, if it's an election year, they play a more dominant role than a year for the remaining 3 years that's not an election year. And that inconsistency is more harming to the development of the entire ecosystem. So the investments that many of the private sector wants to make into the market is often hampered because they're not sure what is going to be the approach by government in the year when approaching an election. I can fully appreciate, why governments would do this. But again, there's been lots of focus on the Zambian market, and that particular year, we've seen where governments have intervened in the market, offered still huge subsidies to farmers to buy their grain at above market prices. They've sold the grain to the millers at below market prices, hence making a loss for the government, and they've still lost the election. So maybe it's a sign that it's not always that intervention making sense in the marketplace.
Right, Chris. Thanks, and that makes sense. I think that would be helpful.
Thank you.
There was another observation on using the subsidies and the seed and this effect of seed systems in Africa. So one of the participants had an observation. It said that seed being a key input for technology transfer and microeconomic stability. Would there be a possibility to ease out the process in the countries, and probably also to see how finance can be provided for these kind of key inputs to the farmers? So Nihar, probably sharing your Zambian example, would you have an observation on this? Especially
let me give two general outlooks on that. I mean, first of all, on inputs suppliers, I mean, we had been working or approach input suppliers and through them, link insurance to input suppliers. There had been other experience in Africa where it had worked pretty well. And in the Zambian case also, there had been initial tries. It's a little bit more difficult than contract farming in the sense that the engagement of a contract farming operator is more in depth with the farmer than input suppliers. That's one part of the answer. The other part of the answer in terms of subsidies, maybe I rather would like to link up on what Sonu said, or the question. I think the role of subsidies when it comes to insurance, because I know more about insurance, is really good to help to improve the enabling environment, similar like Chris said. That could be a better data infrastructure. It could be better, other risk mitigation structures. It could be also increasing the insurance literacy levels of the farmers so that they can take informed decisions, or helping initial stages when the schemes, let's say in insurance, are rather small, to provide these kind of subsidies that the insurance premium stays constant. So when the scheme, scales up to a bigger size, where it's easy to cover the data costs or the other costs, you can withdraw these subsidies or donor support. Just to give a partial answer. I know I just partially answered that question.
No, that's fine. It's completely fine. Right. So thank you, Nihar. We've actually come now to the end of the session, and we are pretty close to the time slots which we had scheduled. I think all the speakers probably stuck to that, and each of the speakers carried out their interventions, which have been very different from each other, and each of these interventions have had an impact. And most of them, they have been, and it has also impacted the smallholder farmer in a very positive way. Apart from this, I think it also talks about bringing in partnerships in place, and then the role of digital technologies, the role of risk mitigation tools, which will actually help in driving this forward. The few years now will be very interesting to see how this develops. that will be that is very nice. So I'll hand it over to Anuj. He's the CEO at WRMS for the closing, and thank you all for that. So just to say, Anuj, you can take it over.
Thanks a lot, Sujay. And thanks a lot to all the participants for attending this webinar. I hope you must have found it very informative and interesting. And I'm sure that you would have a lot of questions. If you have any more questions which are not addressed during the live session, please feel free to send it over email. We would answer that in next 2 or 3 days. A big thank you to all the panelists and to the moderator for carrying it out very well. And it was a very interesting discussion. And a big vote of thanks also goes out to Bharatri for helping us put this together and supporting us all through on this. Just to inform participants, there is a recording of this event on YouTube, which we'll share over email as well, along with the presentation copies and a note. And please feel free to actually pass it on to other colleagues of yours. And I'm sure a lot of people would be interested in knowing more about how we can manage risk for smallholder farmers in Africa. Thanks again. It was wonderful having you here. Thank you very much.
Thank you all. Thank you.
Thank you, everyone, and thanks to the audience. They have been very patient. So thank you, everyone.
Yeah. Thanks.
Thank you. Have a good day.